Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 9th of June 2024, and we're publishing our gold and silver weekly update for the week ending the 7th of June. Last week, we saw gold and silver dip significantly on Friday. Why? Well, let's take a look. Gold fell $35 last week, falling from $2,329 to $2,294, having hit a high of $2,388 and a low of $2,287, a fall of 1.5%. The spread between gold's high and low was $101, twice that of the previous week. Now, last weekend we said gold would trade somewhere between $2,275 and $2,375. Possibly temporarily attempting to spike to 2004. It went as high as 2,388 and traded well within our forecast. We did say that we were more pessimistic for the coming week, as we have been previously, and the figures have borne us out. In sterling terms, gold finished down £24 at £1,806, and in euros it was down €22 at €2,126. Now, silver fell by a greater percentage, 4% in fact, falling $1.23 from $30.42 to $29.19, having hit a high of $31.68 and a low of $29.17, so it basically closed just 2 cents off its week's low. The difference between silver's high and low was $2.51. Last week we predicted it would trade between $29 and $31.50, and we were virtually spot on. In sterling terms, it was down 96 pence, nearly £1, at £22.98, and in euros it was down 1.02 euros at 27.06 euros. The gold to silver ratio rose 2 points, from 76.6 to 1 to 78.6 to 1. Bitcoin is up $1,833 on the week at $69,644. It did, though, go above $71,000 earlier in the week. Equities were broadly mixed, higher in America but lower in Europe. The Dow Jones was up 112 points at 38,798. The S&P 500 was up 69 points at 5,346, and the Nasdaq was up 398 points at 17,133. The FTSE index, however, the UK index, was down 30 points at 8,245. Oils were lower. Brent crude down $1.49 at $79.62. And WTI crude down $1.46 at $75.53. Those who follow our channel are aware that we would like to see oil prices below $70 if we're going to ever achieve a 2% inflation rate. The dollar index stands up 0.21 points at 104.88. Now, last week gold was buoyant until Friday, and then it cratered. Though silver had a bumpy path, falling on Tuesday, rising late Thursday, and then cratering on Friday morning to its lowest levels for the week. So what actually happened to cause such significant moves on Friday? Well, the decline was driven by 2 factors. The first, China announcing that it was halting bullion purchases in May, and the second, and perhaps the most impactful, a stronger than expected US labor market, suggesting US interest rates may remain high longer than anticipated. Last weekend we said that we should look out for Friday's non-farm payrolls. They would be important, and the figures coming in for May stood at 272,000 new jobs, compared with expectations of 190,000 and 165,000 for April. So a rise of 107,000 additional jobs beyond April's rise. Hourly rate wages also rose dramatically from 0.2% to 0.4%, providing a year-over-year figure of 4.1%. Hardly helpful when aiming for a 2% inflation rate. Wall Street is betting that the first interest rate reduction, which originally they were hoping was going to be in April and then in June, won't now take place until at least September, which is what we've been saying for the past 2 to 3 months. The reduction in inflation has been too slow to justify cuts any sooner, and now it looks as if inflation has paused and could even rise with such strong economic data coming out of the United States. But we shall know more on Wednesday when the CPI data, inflation, for May is announced, and the market is expecting a fall from 0.3% to 0.1%. Good luck with that, resulting in year-over-year figures to remain constant at 3.4%. It's also anticipating core CPI to fall year-over-year from 3.6 to 3.5. That is possible, but we're not holding our breath. Also on Wednesday is the FOMC meeting, where the decision on interest rates will be made. And we're expecting a very hawkish Fed stance. You see, they need to show determination in beating inflation without actually raising rates, which necessitates some strong language indeed if they're going to be at all persuasive. We also have PPI or Producer Price Index figures on Thursday. So, all eyes, double eyes on Wednesday. CPI and FOMC meeting. This will be embarrassing for the Fed, particularly as the European Central Bank has already begun cutting rates. But the Fed simply cannot afford to do so and maintain credibility on its war against inflation. That said, inflation is still running hot in Europe, and so their rate cutting was surprising too. So gold and silver are likely to suffer short-term, albeit not drastically. Analysts are predicting gold could fall to as low as $2,150, where there is substantial support, and $2,400 is an area now seen as strong resistance. Silver, also affected by China's cessation on bullion purchases and strong employment figures, may suffer a little more than gold short term, and again analysts are stating it could fall to as low as $26 and struggle short term to get much beyond $30. Our prediction for gold, however, this coming week, and we have to add the caveat, providing the Fed does not raise or lower rates, in other words, they keep them the same and just talk tough, and CPI is close to expectations, though we don't think it will be quite as good on the normal CPI rate as analysts are hoping for. We're therefore expecting gold to trade between $2,225 and $2,325, with $2,200 to $2,340 as outliers. Silver, we predict, will trade between $28 and $30, with $27.50 to $30.25 as outliers. If interest rates do go up, which we doubt, then silver will plummet to well below $27. What do you think? Do share your thoughts. Thank you so much for listening. We'd appreciate it if you'd give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter, sign up there. We shall see you soon. Have a prosperous week ahead and watch out for Wednesday.